Hello everyone and welcome to this afternoon's webinar, or at least it's the afternoon here in the UK. I know we have a lot of traders who join us from the US, but wherever you're joining us from, it's lovely to have you with us for this session. But before we start, as usual, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And just very quickly, for the benefit of perhaps those of you who are coming along for the first time, because I do know we have some of our Forex program students here. I know I have readers of my books, and those of you who maybe just have one or two of our quantum indicators, or even the package, the full package. So, you know, you fall into all sorts of different categories, but the category that maybe you've come along for the first time, what we're going to be looking at is obviously the charts. We're going to be looking at the futures. We're not going to look at stocks today, and we've got a little bit of Forex as well. But we look at charts through the prism of volume price analysis, and that is basically you looking at the price action and the volume together to tell us what is happening, but much more importantly is what is likely to be going to happen next. And details of the methodology can be found in the books that you can find on Amazon, and this is the book, The Complete Guide to Volume Price Analysis. There's also one specifically for the Forex market, and this book is now accompanied by 200 worked examples of the methodology in different time frames. This one is for, we cover the futures, we cover a lot of stocks in there and some commodities. And again, there is also one for the Forex market. So that's what we are going to do. I have got a couple of things that I would like to cover. One of them is as a result of an email that I received, and another kind of lesson, if you like, trading lesson that I'd like to cover is also with regard to the fundamental news, because this is a very important week in terms of news. We go to this calendar, which is at Forex Factory, and you think, oh, well, it's only Forex, it's nothing to do with me because I trade futures, or I trade gold, or I trade oil. Oh, by the way, Forex Factory do have a specific calendar for the metals and for the energy complex, which they've recently introduced. But the reason this week is important is because of the releases that have either come through already, and tomorrow, of course, we've got a non-farm payroll. The week, as I said, it's the first, the start of the trading week and the trading month, obviously. And this is the week where we have the PMI data, which is the Purchasing Manager Index. All the major economies report, but it kicks off with China. And if we go back on this calendar here, very quickly, go back to where we were on Monday, because we left the markets last week in a very positive mood. In fact, they ended up on Friday, and we had some great moves up until today, David, isn't it? Of course, the time we want to do our webinar, everything seems to have ground to a little bit of a halt. Now, there's various reasons for that, and when I pass over to David, he's going to go through the charts with you, because we are actually we believe at quite an important inflection point in this particular rally. But the markets picked up this data, which was released, and the Chinese data always comes out first, so you know it's always going to come out. And this was the number that they picked up here, which came out very early on Monday morning, and this is the number that came on. This is the manufacturing PMI. It came over at 50. Now 50 is the, if you like, the line, if you like, above 50. The economy is considered to be expanding, going well. Below 50, it's not so clever. And of course, given what's been happening in the last few months with the virus and all the economy sort of grinding to a halt, unemployment, etc., this number, forget whether the number is accurate or not. There's all sorts of there are reasons why perhaps these numbers are massaged, if you like, and is it actually accurate? We can never know. That doesn't matter, because it's what the market thinks, it's what other traders and investors believe or want to believe. This came in at 50. The Aussie dollar absolutely took off. We'll have a look at the Aussie charts, some of the Aussie charts later. We've actually posted price action, the range of price action in 1 week on a candle that I haven't seen in a month. It's just, in a way, it's almost insane. But this is what kicked off the mood, if you like, for the week. So if you're trading indices and you focus on the US session, you've got to know this stuff. You've got to get a feel for what is happening, as I said, particularly at this time of the trading month, the beginning of the month. What is the market mood likely to be? With fundamental data, there are a number of factors that you have to consider. We do cover this in great detail in the Forex program, but it's actually applicable, as I said, to whatever you trade, whether it's stocks, whether it's commodities. It really doesn't matter, because the fundamental data is going to have different bits of fundamental releases is going to have an impact somewhere across the market. So you really, first of all, have to recognize which ones are going to have an impact, what kind of impact they have. Is it a high impact, not so, say high, medium or low? And what the calendars do is they very helpfully grade them in this sort of what I call it, it's not really a traffic light system, it's red, yellow and orange. Now, this is quite interesting with the KSIM, because this is a classic example, because even though the calendar may designate a piece of fundamental news as having a high impact, in other words, it's red. Sometimes they use little bulls or little bears, or sometimes they just use stars. Each calendar is different. Depending on when that item of news is released according to the economic cycle, it may not have the impact that you may expect. So, for example, the KSIM manufacturing index is not given a high impact. It's not given a red. It's actually given a yellow, which I think is the lowest category. But because of what has happened, and because the markets have, the economies have been so battered, and the dreadful things that have happened, the market has taken it upon itself to think, yeah, we know generally the KSIM, yeah, we kind of pay attention to it, but it's not as important as the ISM manufacturing PMI data that comes out in the US on the same day. But because of the circumstances that we are at the moment, they gave it more weight, and that was enough to shift the sentiment of the market. So you have to also bear that in mind, and you also have to bear in mind that unemployment, to give you another example, the unemployment statistics prior to the pandemic. Tomorrow we have NFP. Prior to the pandemic, as far as the Fed was concerned, unemployment was really not an issue anymore in the US economy, because the employment rates had fallen. Jobs were seemingly being created. Now, as I keep saying, you may not pay much credence to whether those figures are correct, are accurate, maybe they're being massaged. That's not the issue. The issue is how is the market going to react to those numbers? So pre-pandemic, the unemployment, the NFP would come along. Yes, there'd be a little bit of volatility, and but mostly because it wasn't at an important stage of the economic cycle. The market really, it kind of paid attention to it, but it didn't really, it didn't move the markets in the way that it is likely to move the markets now. And you also have to factor in with something with economic data is that it can be leaked. You know, sometimes there are leaks, and you will see price action in the market. You think, well, why did that happen? Because someone somewhere has some advanced information. I think it happened with the Aussie. Was it last month, 2 months ago, with the Aussie overnight? There was a key piece of Australian data. The markets went absolutely nuts on the Australian dollar, and there was actually a leak. And I have to say, with leaks, I have a little where is it? Hold on a minute. I have it here. This will make you chuckle. Maybe here it is. I think I've lost it. Oh, here we are. Yes, even Donald's Twitter feed was go away. I don't want it. He was kind of censored. I don't think I'm going to get this up in a minute. Never mind. Let me take it on. But basically, a little while ago, I think early into his presidency, he not got into the habit, but on a couple of occasions, before the NFP was released, the number was released, he kind of hinted that, oh, we're going to get some great numbers today, and they, you know, his advisors sort of clamped down on that. So leaks can and do happen. So you have to be aware of that. With regard to how you read the unemployment data, unemployment data, the releases, you can actually look at them pretty much as on a chart, because let me have a look here. It's easier if I just give you the job cuts. Here we are. Where's it today? Let's get one with a nice chart. Here we are. In fact, let me go to tomorrow on the NFP, because that's a much better chart. There we are. You will get a graph. I mean, it is so distorted at the moment. It's almost, you know, it's almost unreadable, basically. Let me find a chart here that you can read. There we are. That's a much better chart. This is the unemployment rate. This is what I was trying to say to you about NFP. As you can see here, the unemployment rate was gradually been falling. If you believe, you know, it doesn't matter what you believe, or you think, oh, that's not, you know, they've been massaged, it's statistics. You can't, you know, you can't put your faith in them. It's not what you think. It's how the market is going to react to them. But you can see here, between 2018 and 2019, unemployment the unemployment was fairly steady. You know, it wasn't, you know, it wasn't going down very much, but neither was it going up, which is the most important thing. So as far as the Fed was concerned, everything was okay with the US economy. Then you have this massive jump up. Now, at the moment, it stands at 13. I think tomorrow it's I don't know what it's forecast to go to 15% unemployment. Is it going to be higher than that? I mean, these are, you know, some people are saying these are apocalyptic numbers. These are numbers that you saw in the Great Depression. So if you like, the unemployment rate and the labour statistics are now a very important release. They always were an important release. Sorry, this is the Canadian one. I do beg your pardon. Where are we? Here we are. This is exactly the same. There we are. Beg your pardon. With the US, but you read the chart in exactly the same way. So you see the chart. You can see here in the US and with Canada, they were both falling. Then we've had the pandemic. In the US, it's forecast at 19.5%. The Canadian one is 15. Terrible numbers. That could even be worse tomorrow. So the market is kind of slowing down now. It's, you know, maybe the realization that, you know, the market is kind of discounting what's been happening with regard to the pandemic. But maybe tomorrow, if this number certainly comes in far worse than at 19.5, we could see a huge reaction. There was always a reaction when the number was down here, but it's the relative reaction. It's going to be much bigger. And also, whilst this was always a high impact event, it was never as high an impact when the rate was down here than it is here. And you will find a graph for all the releases, I'll just pick another one at random. Not all of them will have this nice sort of trend, as it were, because some releases are very volatile, as it were. This is the average earnings, as you can see here. They don't really, sometimes they dip, sometimes they go up. In fact, some of them, let me have a look if I can find a better one to give you an example. Let's have a look. Trade balance. Let's have a look at Aussie retail sales. Have a look here and see what Aussie retail sales. Yeah, some of them just go nowhere. They're in like a consolidation, if you like. They go up, they go down a bit. Yeah, fine. It's awfully interesting. But because at the moment, because of the pandemic, the Aussie retail sales were looking good. Now they've crashed out of sight, and Australia is now in its first recession, I think, in 30 odd years. So fundamental news is applicable to whatever market you trade. It doesn't really matter. You have to be aware of the releases, the time of the month of those releases. I mean, obviously, those of you who are in stocks will know that you have earnings seasons as well, but these are the releases that traditionally, if you like, Forex traders tend to pay more attention to, because they have more of an instant impact on the Forex market. But because of the, all the markets are connected, and I think they're much more connected in a way that they were never as connected when we first started. So it really doesn't matter what you trade. You really have to be aware of the releases. They can impact the instrument that you trade, the market that you trade. You will find them all sorts of calendars. We suggest Forex Factory, not just to Forex traders, because of the way the data is presented. So do keep an eye on them. As I said, even if it's just the indices that you trade on a daily basis. So you read them in the same way with a chart. Some charts are a little bit more illustrative, if you like, the graphs. They will have more of a trend. Some don't have a trend. They're more like a consolidation, because they kind of move up and down a bit. But it's just something that you really have to be aware of. And as I said, and the impact of the news, the way the news impacts the market, certainly in Forex, much more so, I would say, is you always have a knee-jerk reaction, and then what tends to happen is then you have a bit of a fade, and the reason for that is given as, oh well, the market reacts to the headline number, and then when they've had a little bit of time to consider the finer details of the release, and possibly the original trend is keeps going, or you have a reversal. It's very rare that you get a major reversal of a piece of news. I'm not saying it doesn't happen, but it is unusual. You get the volatile reaction, you get the fade, the calming down, and then possibly the carrying on in the same direction. I've actually got a really nice example of that for actually the Euro Aussie, because today we had the ECB interest rate decision and press conference. And when we look at that chart, I will actually explain to you that one of the ways that you can try and get a feel for what possibly could happen as a result of the news, or what may happen, is actually to look at the slower timeframes. And the Euro Aussie is a really lovely example from the daily chart from yesterday, which kind of hinted, regardless of what was happening today with the ECB, that possibly the Euro Aussie was on a bit of a turn.